Hello, investors. It's Don Vandenbord, Senior Portfolio Manager with Revere Asset Management. Today is Friday, September 9th, 5:24 p.m. Eastern Time, coming to you from St. Augustine Beach, Florida, with the Big Show, the Friday edition of the Revere Market Insight video, where we take a look back at the prior week, take a look ahead at key levels for next week, and update the world famous 21 over 21 leaders list. Let's dive right into it. Big week for the market. State of the market upgraded from correction to bear market bounce. You can see over here on the trend gauge. Leadership over the last 3 days has gone from Tuesday being neutral with the red arrow pointing toward bearish to neutral on neutral on Wednesday, to a green arrow on Thursday, to a green arrow sliding even further to bullish on Friday. It was just that kind of a week. You had a false breakdown on Tuesday, and then 3 up days in the market. The market just has had enough of going down. For right now, every pullback over the last 2 days has been bought with 2 hands. One scare midday yesterday, bulls immediately came back in, and this was enough for us to see to get off of our neutral status to start putting some money to work. No changes on the trend gauges because we need 2 definitive closes above the 21 and the 50-day moving average. We got the first close for 3 of the indexes. You'll see when we take a look at charts momentarily, but we're still showing bearish slash downtrend for our short-term 21-day exponential moving average and our medium-term 50-day moving average, but the green arrows have appeared here pointing toward neutral, and positive follow-through, even digestion next week. Before we get some follow through, we'll move those into neutral and or bullish depending on how much cooperation we get. Right now we still have the Dow and the NASDAQ 100 holding out between the 21 and the 50-day. As I said, you'll see that momentarily when we look at charts. Long term, our 200-day moving average, we're still firmly below that. No changes there. So what happened today? Really not something easy to deal with if you are looking to get bullish. We had 2 days up off the low. We had a false breakdown on Wednesday, and then we had a bullish day, a false breakdown on Tuesday, bullish day Wednesday, bullish day Thursday. The last thing you want to see is a day 3 gap up. They're failure prone, and it's hard to get any good entries considering it was the 3rd day up. But we didn't see any failure in any way, shape, or form with this. There was just persistent buying all day, no real sell-off. You'll see when we look at an intraday chart, and it took the S&P 500 above both its 21-day and 50-day moving averages. I should actually say 50-day and 21 because of the way they're configured, but I couldn't find anything wrong with today. Some recent leaders gave back a little bit because of some downgrades, but all in all, a very over 90% up volume. Just a real strong day. G6 up 2.34%. This is our in-house composite of 6 growth ETFs that we use to track the overall growth stock environment. S&P 500 gapped up 0.65%, closed up 1.5%. NASDAQ 100 up 2.2%, Dow up 1.2%, mid-caps up 1.8%, Russell up 1.95%. Global Diversified 60/40 Stock and Bond Index up 1.05%. In-house, a paltry gain for the 3rd day in a row, as we transition from basically being flat to getting ourselves set up to participate next week if the market continues higher. And you'll see with the moves that we made in-house, but with the gap up and it being the 3rd day up, not real easy to make progress. We're green on all 3 of our individual stock positions, not by a lot, and also on the SSO positions that we took. 4 of the 5 tranches were green on those, but we came in still with a little bit of a hedge offset by our 2 longs. So basically we came in neutral. We added a bunch of exposure today. at very low risk entry points, and we'll see how next week plays out. So we'll get to the tail of the tape and the updated 21 over 21 list, but first let's get into a description of how we operate here at Revere. Pretty different from any other asset manager that you might come across, from the standpoint that we don't just, on day one that you come in, stick all your money in the market, divide it up among asset classes and some mutual funds, and say check with me in 6 months. We're meticulous with new client money that comes in, and we're also meticulously defensive about maintaining gains and cutting losses for clients that we've had for years and years. And the way we do this is by taking a look at starting with the 5 indexes, and if they're healthy, we look to what individual sectors and leading stocks within those sectors are performing well, and we focus our capital there. Ideally, the market is doing what you see here last November, trending up above its short-term 21-day, medium-term 50-day, and long-term 200-day moving average. Not much to worry about with the market in that situation, but if you start to roll over, head sideways, you'll see the market will take us and our clients out of the market, decrease our exposure, because we'll just see our stops starting to get hit, and we'll see a decline in the number of actionable ideas that we have on our watch list. And sometimes that sideways action turns into just a plain downtrend, like when the moving averages start to roll over and we break below the black line, the 200-day moving average, which we saw in January. Sometimes we fight a battle around this 200-day moving average, but things changed on April 21st when we tried to get back above, had a very miserable failure, hard negative reversal, led to a big down leg. We had a bounce, another down leg, consolidated a little bit, and had a nice uptrend here during July and August until we ran into the declining black line, the 200-day moving average. We failed there, rolled over, came down to a very reasonable and well-established support area at 3,200. We tried to undercut it, but we didn't on Tuesday, and then you see the last 3 days. This just means that everybody that sold since this 8/26 Powell press conference from Jackson Hole, where he said, get the idea that we're going to cut interest rates next year out of your minds. We're going to maintain high interest rates until inflation comes down to 2%. That thought was echoed over and over and over again this week by various Fed heads coming out and speaking, and the market initially sold off hard, continued lower for a week, tried to bounce last Friday, failed miserably, but that got the last of all of the bears, or anybody that was holding on with weak hands, got them all sold out, and now we're set up for a bounce. Third day up, you normally don't see the strength that much on the third day up, maybe some short covering, but regardless, it got us above this red line, our intermediate term 50-day moving average, and above the green line, our short-term 21-day moving average. When we get above these, particularly the 21, we like to pile as much money into SSO as we can within reason, as long as we get a short-term, as long as we get a good risk-reward entry, which we got all throughout the day today. So if this fails, no problem. Any pullback should be contained by the 4,000 level, which is about 1.5% down. We'll be out if it fails with very small losses, and we'll see where we go from there. But for now, the bulls now get the benefit of the doubt. We also, the low on Powell's speech day, we closed at 40.57. We're at 40.67, so we got back above that. So this 40.57 area is going to be key. You got to give it plus or minus 1% in any direction, but certainly down to 4,000, we should hold on any pullback. Maybe very similar to this period here, when we had we just exhausted all the sellers on July 14th. We had a nice 4 to 5 day run up. We pulled back, tested the moving averages here on 7/26, held, and then had a nice second leg up off of the bottom. We may be looking at a similar setup right now. That's what my as strong as the S&P 500 from a standpoint that we did not get above the 21 and the 50-day moving average. Basically, they are overlapping, and we closed right on it within 0.2% either way. Do note that the stochastic cross up continues. We got this on the S&P. We're not really out of the woods until both the moving average and the indicator get above the 20 area. You can see we failed a couple times back here in May, but we want to get firmly above there. More conviction that this bounce is more than just a 3-day bounce. Dow Jones Industrial Average looks pretty similar to the NASDAQ 100. Charts are slow tonight. Here we go again, right below the 21-day and the 50-day moving average, ran right into them and paused today. We do have the stochastic crossover there too. Let's go to mid caps, MDY. Closed above the 50 yesterday, so we got 2 closes above the 50 and 1 close above the 21 for mid caps, showing some relative strength this week. Small caps, IWM, first close above both the 50-day and the 21-day moving average, also with the stochastic crossover. Let's go back to that intraday on the S&P 500 that I mentioned earlier. Here's that false breakdown on Tuesday where we got below last week's low at 39.03 just temporarily, and then we tested it again during later in the day on Tuesday, but we held it. And then big trend up day on Wednesday, gap down on Thursday, trended up strong in the morning, tried to break down, but no sir, bulls at this 39.53 area came in strong. Again, look at this parallel line here. You can see over here on the left side of the chart that 39.50-ish area, 39.40 to really to 39.60 was a battleground over here a few weeks back. But this was the opportunity for the bears to take charge back away from this little bull run, and it failed. We continued strong into the close. Another gap up today, continued strong, a little bit of a pullback intraday, and then an afternoon trend up into the highs. Closed right above this prior 40.63 high over here from August 29th. This was before, let's go to the Powell gap down back on the daily chart. That was the prior area before the 826, the 826 gap down. So good news here on the S&P, buying intraday, no question about it. Anytime we tried to do a pullback intraday today, buyers showed up. So as I said, we came into the day with 5% in SDS. That was actually a negative bet taken on this attempted breakdown here yesterday. But when that breakdown held, step one, if you're in a hole, stop digging. It's okay to be wrong. It's not okay to stay wrong. So we offset that immediately with the gap up when we broke higher, which was right here, right around 10 o'clock, and then just added. We did 5% buys throughout the day. Each time we pulled back, there were multiple bull flags intraday. Every time we broke higher with them. So each of the 5 buys made from a progressively higher. We don't like to average down, so even if it was just 10 points higher, we did 5 total buys. The only one not profitable is this last one, as this breakout at 345 faded into the close. So we've got 4 positive buys, 1 slightly negative buy, and now we're set up to participate next week if the market decides to go higher or just have a nice little consolidation day, which is actually preferred after 3 days up. Let's go to the tail of the tape now, and then we'll wrap it up with the 21 over 21 update list. As I mentioned yesterday, some tailwinds with the indexes and the G6 having this daily stochastic oversold cross up. Markets just don't go down forever. There are various bear market rallies, and this is what we're seeing right now, a bear market bounce. We did another positive from the tailwind standpoint is the VIX broke below 24. Let's take a look at the VIX very quickly. And if you look at this, you can kind of see that from this 24 to this 26 area, it seems like if we're either spending a lot of time above it or a lot of time below this area, this 24 to 26 area, let's just call it 25 to be safe. So when you're underneath 25, it's conducive to buying stocks. When you get above it, normally you're pulling back or you're trending lower. So we use this 24 to 25 to 26 reference point here. We battle around it a couple times. We got above it late last week and early this week. But again, 3 days down in this corresponded with the 3 days up in the index. And when we're now below all of the moving averages, the 21, the 50, and the 200 day. As long as that stays under here, under this 24 and under the moving averages, it's a tailwind for the market. So sentiment neutral, here's the VIX down, 22.79 was the close. Fear and greed up to 45, which is neutral. It was on fear. We've now got components of both a bull case and a bear case. Break back above the 21 negates part of the bear case, reclaiming the 21 reinforces part of the bull case. So we'll battle it out here for a little while and see ultimately who wins. I'm not worried about labels. I'm worried about making money, and whether the market wants to go higher or lower, I'll react accordingly. I'm not going to stick with one particular mindset and just let it play out. So some news, Fed's Waller following up 4 or 5 Fed speakers yesterday, reiterating again the overall hawkish tone. Markets didn't care, continued higher. This up day 2 transformed into a gap up day 3. Possible signs of exhaustion. Usually after a 3-day trend, one way or the other, things get a little bit weak in the direction of the trend. It's time to catch your breath, so we'll be mindful of that next week. That's why we wanted to get. Ideally, we would have put more to work yesterday, but that intraday harsh move down kind of derailed that possibility, but I'm pretty content with what we've got on today. Good risk reward for whatever comes next week. Expectations coming in today were between neutral and positive. Positive because pre-market, I was noticing when I woke up, we were going to gap above the 50-day moving average, and it stuck. Gap up and a trend up is best case scenario for the bulls. As far as support and resistance, gapped above R1. R2 is the next level up, this 4080 on the S&P. That's a key level to watch for next week. On the NASDAQ 100, we opened between support and resistance, but we just trended higher throughout the day, closing at 307. So up into this 306, 307 resistance area on the NASDAQ 100, which will be another key area to watch next week. Let's see, 11 out of 11 sectors were strong, particularly led by oils, cybersecurity, XME, retail, semiconductors, and software stocks, particularly cloud software stocks. Major thing negative, but this is a positive for bears or for bulls, was the dollar down today, 0.71%. So we had 2 gaps up last week and this week, and now we broke below the 80 MA. Look at how we've been trending. Let me blow this up a little bit so you can see it a little closer. And let me get rid of the stochastic so it's even clearer. You can see how we've been trending above the 80 MA with the strong US dollar, but today we gapped down, first close below the 8 EMA, going all the way back to August 12th. That's another significant event that's good for bulls. We'll see which direction UUP decides to go next week. That's the US dollar. So some focus tickers coming into today. I'm going to go through these because they're pretty much all in the 21 over 21 list, but I do want to point out one that is not in the 21 over 21 list, but finally stopped going down yesterday. It undercut the recent lows, closed back inside, and a decent update today, up 1.9%, but still below all its moving averages is Apple. We'll be keeping a close eye on that this week because of its heavy weighting on the indexes. The indexes just really won't storm much higher at a brisk pace if Apple's not participating. Look at the lack of relative strength over the last 4 weeks in Apple since it peaked at 176, which was also the day we ran into the 200-day moving average on the indexes. So Apple will definitely be looking at. The rest of the stocks that we want to take a look at will be in the 21 over 21 list, so we'll get into that, including one that we bought today, Enphase. So let's bottom line today. Gap up and trend up on day 3, took the S&P above the 21 and the 50-day. Let's see if they can hold on to those levels next week. As far as support and resistance goes, got above the declining 100-day moving average, the 50-day moving average, and the 21-day moving average. I actually have these out of order. This needs to be moved down here because of how quickly the 50-day or the 21-day moving average has been coming down. So this actually should be below there. I'll fix that for next week, and we'll see where we go coming into next week. As far as the 21 over 21 goes, let's bring that up now, and as always, we'll start with the stocks that got booted out this week. 3 casualties. Let's start with coal, as coal stocks did not have a good week. BTU gapped up, had a negative reversal on Tuesday, and closed between the 20 and the 50. I've got a new category that I'm monitoring under the 21 but above the 50. A lot of things that come off the 21 over 21 leaders list just come down and end up holding their 50-day moving average, which is completely normal behavior by a leading stock. It's just that we like to focus on stocks that are above the 21 to get the best of the best. So BTU was punted. Warren Buffett not happy to see Oxy punted. This was the big move up on 8/19 when he was approved to buy up to 50% of the company, continued higher, but a pretty harsh pullback over the last 2 weeks, sitting on the 50-day moving average. It's another one I want to add to that group. I already did add it in there. Sitting on the 50-day moving average, really a pretty low risk buy point if you want to get in bed with Warren Buffett there. Ew, I didn't like the way that sounded. CSIQ, this is a solar stock that had a big move down yesterday on a downgrade, and then today couldn't get back above the 21-day moving average. Solars in general were weak today, and this actually did close right on the 21, but we've got a stronger one that we bought taking its place. So the first 3 that we're going to review here are the 3 ads, and 2 of them were bought this week. The other one is a stock that I think could play a very key role in whether or not the market is going to go higher, and that's Tesla with its big growth numbers and relative strength when it gets moving. You can see it's really formed a big cup and handle here. This handle might be a little bit low from the base standpoint, and that's why it's showing as a flat base. But if this can get above the 200-day moving average, where it hasn't been for the last 4 weeks, 4 nice days in a row on Tesla, starting with relative strength on Tuesday while the markets were floundering. You can see the relative strength line, how it ticked up all week. So money, it appears, flowing into Tesla. Some follow through on this strength today. We've got our eye on getting back into this. Enphase added this week. We bought this today on the pullback. I mentioned earlier this week, we wanted to keep an eye on this as a canary in a coal mine to see if it was going to be able to hold its breakout, which if leaders break out and continue higher in a bull market, it gives you more conviction that the move is real. Well, we had a big gap down today in Enphase on a downgrade. Basically, the company that downgraded it said, well, it's up 50%. We don't know how much more it can go. So we're just going to downgrade it. And knee-jerk reaction very often to downgrades is just to sell it. And that's what you saw here at the open. It gapped down, continued lower in 2 waves around this 300 area, which had been support over here on this nice flag pullback on the 7th, acted as resistance, and it couldn't get back above it. We bought it here in this initial bounce off of 300, watched it go down to 295, but by the end of the day, we were even on it, as it really had a good close, and a good close is what you want to see out of a leading stock. When you look back here, this might be just barely a blip. Note 3 heavy days of volume. That today really doesn't, the fact that volume was above average and that it closed in the top of the range actually makes this a support day, which makes this, the fact that it's a pink volume candle on a support day is the equivalent of a blue candle, honestly, because of the range that the stock closed in. It held the 21, it undercut and reclaimed the 8. Nothing wrong with that. Actually gave an opportunity if you wanted to own end phase and didn't get in, or got in and watched it trickle down the way we did before. We bought back in today. So there's end phase. We added that, and ON I mentioned yesterday. We bought this on the move up through the 21, gapped up 2-3%, closed in the lower part of its range, but this still looks fine, showing some relative strength over the last couple of days, right at its pivot of this long flat base. So failed breakout at first. Let's see if it can right itself and continue to go higher. It does have that silicon carbide trend going for it. Moving on, so these 18 were left over from last week. McKesson, medical drug supplier, just going sideways, but the market had been trending lower, so that's a good thing. Sarepta Therapeutics, nice move higher the last couple of days, closing at all-time highs. Ulta continues to look very strong. Nice little 2-day consolidation here after 2 strong up days off the 21. AXSM, biotech pulling back after this very, very strong move up on phase 3 approval, consolidating above the 21 right at this 60 area. Pinduoduo going sideways after its big move up on earnings right at this 69-ish pivot. First Solar, really the strongest of the solar stocks, riding the 8 EMA higher. Lithium LTHM, 2 nice days, a gap up today, just a little too far, pulled back today. Looking good. Michael talked about this last Friday on the podcast in our sector focus. Make sure you check out the podcast this weekend. He talks about uranium. So really, Michael's done a great job each of the last 4 days diving in, or last 4 podcasts on Fridays diving into sectors. First with LNG, then with lithium, then with solar, and also now with uranium. So be sure and check those out. CCJ, we bought this yesterday. Again, gapped up this morning, closed in the bottom part of the range, but it was its 3rd day up. Very typical action for stocks to rest after a 3-day move. Palo Alto reasserting itself after its gap up on earnings and sell off along with the market. Undercut the 200-day and 21, but reclaimed it over the last 2 days, and certainly helped out by Zscaler, which had a good day today after reporting earnings last night. CF Industries, these stocks, this and Mosaic, showing some tight action in the last week and a half after failing to break out of their cut bases. Maybe they're just putting in that handle. Exxon, weak early in the week, strong late in the week, back above the 21. BJ's continues 4 nice strong days and amazing relative strength. We initially bought this gap up, but got stopped as the market pulled back. That looks really good. Wolfspeed, we're out of this right now, but watching it closely. Another silicon carbide leading stock, pulled back, did not break the low of its gap up day, and holding the 21-day exponential moving average. CEG, an alternative energy stock, looking good, making higher highs. CMG pulled back. This was a perfect day, this shakeout to get in. We were waiting for the market to right itself. It did, and now 4 up days for Chipotle right at the top of this handle. Haven't missed it if you're not in it. PWR, couple nice days back above the 21. Shockwave, underperformer today, 2 nice days up. It looks like 300 has flipped from support to resistance. We need to get back above that and certainly hold the 21. Lack of relative strength over the last 2 weeks on this after its big move up and continued accumulation. Took it from the low 200s up to 300. And finally, LNG, been on this list for quite a while, big negative reversal. After its gap up on Tuesday, we got stopped out of the last of our position for this week. Reclaim the 21, however, and that's your updated 21 over 21 list, and that is going to wrap up this week's Market Insight Video Big Show Edition. So if you're interested in our approach, trend following is what we call it. GROTECTION is what we call it. We grow assets during uptrends, protect them during downtrends. If you'd like more information, email me, don@revereasset.com, or phone 855-REAL-WEALTH. That's 855-732-5932. Dan Stewart will answer that, and he would be glad to talk to you about all things financial. So wrapping up the week ending September 9th, this is Don Vandenbord. Two charts I want to bring in before I close it because I didn't reference it. This is why we constantly strive to protect client assets. You do not want to get hit with a negative sequence of returns after you approach retirement because you just don't have time to recover from it. You don't want to see your nest egg take a huge hit entering retirement, and that's why we have rules to get in, rules to get out, and then rules to re-enter when we stop going down. And another thing I want to point out is we underperformed this week. We experience this all the time. And it really, what happens is when you're going from a correction or a bear into the early part of the recovery, which the last 3 days have been, it takes us a while to get started. And we do have minor to moderate underperformance all the time on these. But when you don't lose the money in the bear market in the first place, you can afford to be a little bit behind the curve after the market rights itself. We go in incremental steps. We did a bigger step today as the S&P just continued to go higher. But all entries were low risk, and I'm very comfortable at where we are headed into next week. Our downside 1.5% to 2% on the indexes. So remember, it's not how much you make in the market, it's how much you keep. And that'll wrap up this week's big show. Remember, just the facts here at Revere, no opinions. We take our cues from the market. It doesn't matter what the headlines are. It doesn't matter what CNBC says or any talking heads say, or who's predicting a big rally, or who's predicting a big sell-off, or who's predicting we're going to chop around. It doesn't matter what anybody thinks. All that matters is what happens in the market. We interpret it and react accordingly. Give us a shout if you're interested in this. Thanks for listening, and have a great weekend.